So, a very good evening once again to all our masterclass students and a warm welcome to our new batch. This is your first weekend session. We're going to talk about the Nifty, Bank Nifty, and of course the rest of the sectors. We're going to take a look at the RRG graphs and evaluate the sectoral rotation happening. And then the rest of today's class is going to progress exactly the same way, wherein we talk about the open positions, your doubts, questions, and of course we'll take a look at what are the opportunities for next week. So I have the Nifty, the weekly, daily, and the 125-minute time frame. Weekly is still clean. On the weekly chart, there is yet no distinct signs of worry to this uptrend. The daily chart, however, we have discussed this, has been slowing down in terms of the momentum, which in the recent past has kind of slowed down a couple of times in the past, and the trend is so strong that it kept on going up. In terms of the Heikin-Ashi candles, there's a bit of a sign of consolidation. We have a decent two higher shadows kicking in right on top there. Again, I wouldn't say that in the daily chart is telling us something negative. The daily chart is not telling us that a top is in place yet. So price-wise from the weekly, price-wise from the daily, we don't have a confirmed fractal top yet. Now coming to the 125, wherein we did see a bit of a slowdown, a correction in yesterday's trade, almost close to 300 points. And that's why we have these three red Heikin-Ashi candles, which is giving us a feel of a bit of a breakout which is failed, and a successful breakout failure reverses immediately, which happened yesterday. And if this successful breakout failure has further room on the downside, we should get a bounce back and open up, drastically on the downside. So if this leads to further downsides, then keep an eye on a pullback and then further fall. What is the guarantee that the pullback will come? There's no guarantee that the pullback will come. But one thing we can definitely say that we have a breakout failure in our hand. How good is this breakout failure? From the 125-minute time frame, it's not a bad breakout failure. From just looking at the smallest time frame on my screen, it's not a bad breakout failure as of now. And looking at this, there is definitely chance, possibility, probability of prices dragging itself further down, maybe towards a retest of these lows, 24, 400, 500, 600. We don't know that, but from a short-term point of view, it's possible from here. The moment we add on the readings from the daily or the weekly time frame, it's still pretty strong. The daily and the weekly charts are still all right. So we'll take it bit by bit, part by part, and not jump into conclusions that we have a top in our hand. We've got a bit of a cut after a long time, after relentless upsides. We have some bit where the market has come off. Trust me, this little 300-point correction is literally nothing in terms of the way the markets have rallied and shown strength, especially after the election result drama. A 300-269 point move on the downside is negligible. It's trivial. It's nothing. So how should one strategize? From a short-term trading point of view, I would say exactly the way that we were doing over the last couple of weeks is stay open to opportunities on both the sides. Look for long as well as short opportunities. And we've done that with a little degree of failure as well as success. So we'll continue to do that. The takeaways from this weakness is definitely the mid cap and the small cap. There's no doubt about it. In fact, in yesterday's class, you were flagging it off to me that saying that the breadth of the market on Thursday was not good. The small cap was down. Few selected index heavyweights, it was holding the market up. So those are all true, and the breadth of the market stays weak. So with this, we'll take a look at the sectoral behavior, the sectoral performance. And for that, I will first take you to the RRG graphs. These are the RRG graphs, which I evaluate every weekend to figure out the sectoral rotation, how they're playing out. and I use them on stockcharts.com. So first thing that I'm going to do is I'm going to reduce this 10 weeks to 1 week. I'm going to reduce this 10 weeks to 1 week, and I'm going to sort this in terms of percentage just to have a feel of the sectors which underperformed or which dragged the index overall on the downside. So media doesn't matter too much. It's just a few selected, and that's doesn't have much weightage to the overall market. Then we have metal. Then we have small cap, mid cap. We were just talking about that. Oil and gas, auto, and healthcare. Now these names, clearly the one that stands out and clearly the one that we managed to pick well last week is the CNX Metal Index. So I think we got a shorting opportunity in Jindal Steel, and there were other counters like Vedanta and others were also showing pretty good setups. So metals have followed that sink on the downside and opened up. And then we have the small cap and mid cap, which is slowing down. Remember, this entire rally was significantly led by the small cap and mid cap. So they cooling off a little bit is not a big surprise. And then you have the oil and gas, auto, and healthcare. Selective stocks have come off over here. We'll evaluate that. On the positive side, it's mainly these two, IT and FMCG. It's a beautiful sectoral rotational behavior that's happening. If you take a look at 3 months back, the IT, FMCG were kind of softer and down, wherein your metals, your auto, your oil and gas were right on top. And now it's turning around. The ones which were strong earlier is slowing down, which is leading the IT and FMCG to outperform. Now, I think in this area also we have done pretty good in the last 2 weeks, wherein we identified FMCG, Hindustan Unilever, Nestle, Britannia from the daily time frame, TCS from the IT. So I think this sectoral rotation that has happened and is happening, we have kind of synced ourselves pretty well to it. So far, so good. Now we have to figure out that in terms of RRG language, which is the leading quadrant, the weakening quadrant, the lagging quadrant, and improving quadrant, who lies where and what are their tail. Okay. So for that, what I'm going to do is I'm going to stretch this 1 week to around 12 weeks. That's my window of time frame. And now, rather than the percentage change, I'm going to sort it in terms of the tail of the RRG graph. Right? So let's sort it out. The greens are the leading quadrant. The blues are the improving quadrant. The yellows are the weakening quadrant, and the red is the lagging quadrant. Those who do not know much about RRG graphs, it's possible. The RRG graph is an analysis to figure out the relative strength of that particular stock or sector vis-a-vis an underlying, and I have taken CNX 500. And I'm doing it on the weekly time frame. I'm not doing it on any other smaller time frame. The natural flow of these RRG tail or worms, if you may look at them, is clockwise. They generally flow clockwise. So any leading stock will continue to outperform. Then slowly it will, the relative strength will slow down. Then it will start to lose some grounds, and it will start to underperform. Then it will start to kind of be a laggard, and it will have no relative strength or strength in terms of price. Then slowly, after getting really oversold, it will try to gain some momentum and go to the improving and then go to the leading. So this is the general flow, clockwise flow of the RRG graphs, but they do not always happen in a beautiful manner like this. They can go up and down over here, then finally up here, then like this. So a lot of drama may happen. What are we doing here? We are going to take a look at the RRG graphs and the tail behavior of these sectors. And we're going to check parallel, side by side. What is the actual chart telling us? That will give us a lot of understanding. So there are two sectors which are still holding on to the leading quadrants. That's the small cap and mid cap. The two sectors which really came off last week are still holding on to the leading quadrant. Now, this we should definitely evaluate the raw price behavior of these two indices. Now, mid cap. CNX mid cap on the weekly chart is given as a red HAGB. The momentum reading, the trend reading is still fine. We cannot call it a point of reversal. It can be a point of consolidation. Definitely things are going to slow down. The index has given us a decent looking correction, and the index was going through a very decent looking slant behavior for quite some time. This is the area, this is the zone where we do not like to get into long trades unnecessarily because of a slant. It has come off and it is yet to give us a bounce back. Now, if we zoom into the daily time frame, we have a red HA, we have the momentum on the downside. The trend has just started to angle down too early. But any kind of a bounce back from here on can be an opportunity. 125-minute time frame clearly has moved into a sink on the downside. So mid caps have just started to show a bit of a short-term correction, and it can lead to further downsides. The direction can get in sync. So stay cautiously bearish. Same reading, similar leading will come from the small cap. You have a divergence kicking in, follow through correction, maybe a pullback, and then a follow through downside. The pullback is going to be very, very important, because in the past, whenever this index or the mid cap has come off, whatever pullback it had given, it had led to a new high. So even now, if the pullback comes, it's extremely important, number one, that the pullback comes and the low of the pullback is broken. That will give us confirmation, yes, things are going to go down. So both small cap and mid caps, though they are still in the leading quadrant, it looks like there is a possibility of further slowdown or consolidation. Now, coming to the improving quadrant, media, it's not much to talk about. It's IT. Now, you can see over the last 12 weeks how the tail of IT has moved. It was weakening, it was lagging, then it started to pick up momentum, and now over here it is in the improving quadrant, looking up, heading probably towards the leading quadrant, probably. RRG graph of IT and FMCG are pretty good, means they are telling us from here on they should outperform. Means if the market falls, they can fall less. If the market goes up, they can go up more. Let's see whether price tells us the same thing or not. IT. CNX IT had a brilliant bounce back. You couldn't have asked for any better bounce back than this after this meaningful correction. Things are looking really good on the daily as well as the weekly chart. No immediate sign of worry. We are predominantly bullish on the IT stock, IT pack, and we keep it that way. There's no reason rational to go bearish. FMCG also will give you a similar kind of a good looking weekly chart. A very, very strong daily chart. It's a first order sink on the daily chart. It's a first order sink on the weekly chart. There's nothing on the charts apart from the fact that it has gone up one way consecutive days on the Heiken Ashi. It is stretched. Apart from the stretched behavior, there's nothing to be bearish about. So IT and FMCG, we maintain a bullish bias. Then comes the Bank Nifty and the Fin Nifty, the CNX Fin, sorry. Now these two are really important because together they enjoy a very, very high weightage in the overall market. After that comes IT. So Bank Nifty and CNX Finance, both of them are actually in a very, very sweet spot. In terms of RRG graphs, they're in the improving quadrant. They have improved up and they are, as you can see, they're trying to head towards the leading. So it's not a bad point to keep in mind next week. Even if the market comes down, we need to figure out whether the Bank Nifty is underperforming or outperforming that down or not, or if the Nifty manages to bounce back, whether the banks are supporting that or not, because there is room for relative outperformance from these two pockets. Starting with Bank Nifty. Now Bank Nifty has got a first order sink on the weekly chart, which is a very, very strong chart. The daily chart is going through a bit of a consolidation, slowdown, choppiness. during which the momentum has completely cooled off. The structure of the chart is still positive. It's not that one of our classic thunder setups, which we call, it's not there because the momentum is lacking. It's just a situation where the momentum will pull the prices down or the trend is strong enough to get a breakout. In my experience, trend has always been stronger, and we should keep an open mind that either of the movements can happen. To trigger yourself, I think it's not a bad idea that to zoom in and take a look at last Thursday's price action. Friday was almost like an inside bar, almost, it was not. But it's the Thursday's price action, which is the high is almost close to this particular day, which is 12th of July and 18th of July. So every time it has come close to that 52,800 mark, it has kind of managed to create a ceiling, a resistance. And every time it has come close to that 52,160, it has managed to create a floor or a support. So yes, a decisive break and close beyond the floor or break and close above the ceiling is important to get some directional clarity. Momentum is suggesting weakness, trend is suggesting strength, and that's why we are stuck in this range. We have to be selective over here. We've seen the way PNB, Bank of Baroda has come off. On the other hand, SBI has held off. HDFC Bank has come off. ICICI Bank, Axis Bank has held up. So it's not an across the board sectoral movement. Within the pack, within the PSU, and even within the private sector banks, you need to be really picky and be able to time the trade. Or else, okay, I like private sector banks. You just cannot blindly buy a few of them and expect them to go up. So they're very selective movements. Finance will also give you similar kind of a reading, and we can see how Bajaj Finserv and Bajaj Finance have kind of diverged in their movement in the recent week and a half. So essentially, these two pockets are waiting for a good breakout on the upside or on the downside. Keep an eye open on both the sides. Considering the weekly chart, which is very, very strong and holding really well, there should be bias on the upside breakout. There should be a bias of upside breakout. Now, price will dictate that. Let's see what happens. Now, moving on to the weakening quadrant. Now, weakening quadrants are those where the stocks earlier or the sectors earlier were leading, and now they have started to slow down. In this comes realty, auto, metal, and consumer durables. Now, realty, auto, metal. This is a really interesting three charts. Realty had a great run. It's been holding pretty well. On the weekly charts, you can see back to back some 4 or 5 consolidations over here, right? Trend strong, momentum also doing okay. It's just slowing down a little bit. This has created the daily chart to form some kind of a range bound activity. Momentum has completely come off. Trend has gone directionless. Typical breakout candidate. Keep an eye on Oberoi and DLF and others. It's the metals, I think, which we identified really well, because it's the metals which went into a first order sink few days back. It came off, it gave a pullback and a beautiful opening up on the downside. I think Jindal Steel played out really well the way we figured out this particular trade. Weekly is just slowing down. Weekly is structurally still strong. So one should not sound overly bearish on the CNX metal chart. We might find some supports kicking in at lower levels. So that's one chart which is on the downside. We might look for shorting opportunities, but not after a day when it was down 4%. Maybe in a pullback, we can look for opportunities. And then consumer durables. Consumer durables, if you know, I have this line drawn wherein, there you go, it's trying to probably make a rounding topish behavior. We have a breakdown in the last 2 days. Momentum has gone down and it's beautifully down for the past 2 weeks now. Weekly charts are still kind of okay. So it's not a very, very bearish. I would club consumer durables with the small and the mid cap. That number one, wait for a pullback, and if the pullback fails, go short then, but not before that. So that's consumer durables. And then finally, oh, sorry, I missed out auto. CNX Auto, one of the strongest sectoral charts that you can have at the current juncture, is behaving very similar to the reality where in the last 4 weeks it's just gone range bound. That's the behavior. Momentum has come off. Wait for the sink, wait for the trend to break, pull back and maybe. So if you think things are going to turn negative, if you are of the opinion that the markets are going to stay bearish for let's say July and August and maybe September, then these charts where the momentum has already slowed down after a consolidation should ideally open up on the downside, because it's the autos, it's the reality, it's the metals, and maybe the bank nifty finance. Time will only tell us, which can lead to weakness and which can get counterbalanced by the IT and FMCG. Let's see. So auto also wait. It's not the time to go short, but one can wait. And finally, oil and gas and healthcare. Oil and gas and healthcare, as you can see, the RRG graphs have kind of moved into the lagging quadrant and it's staying there. Let's take a look at it. So pharma, healthcare pack. The chart itself is very strong. It might be in the lagging quadrant. That's primarily because of this area where it kind of underperformed completely. The weekly charts are in first order sync and it's bullish. The daily chart is just slowing down a little bit, a bit of a contra behavior. This is by far not a bearish chart at all. Do not look to go short on the pharma right now. Wait for it to cool off, maybe reverse the short-term trend then. So healthcare, though it is in the lagging quadrant, the actual price chart of the CNX pharma does not match with that. This kind of a reading. And then energy or oil and gas. If we take a look at the CNX energy, it's given a sharp cut, but the weekly charts is this wonderful slant behavior on the weekly time frame is dragging the prices up with some volatility. I wouldn't act on this this pack right now because it's been choppy. I would wait for the trend momentum to come off, get me a first order sink like the metals did, and then look for some shorting opportunities. Can we go long? Well, yes, we have a range expansion. So for long, we have to wait for it to come down a little bit more. So keep your options open to go long or short, both in the CNX energy, not both, predominantly CNX energy. Healthcare pharma, I wouldn't suggest to go short. The charts are not suggesting that. So here we are. The Nifty is giving us a small little correction after what we can see as was an emphatic move on the upside. Will it lead to further downsides? That only time will tell us. Momentum readings are suggesting there is a possibility. We'll see how the 125 minute holds on to 24,500. Do we get a breakdown, a pullback? Does the low of the pullback gets broken? So a lot of things will slowly unfold to get to kind of give us that kind of clarity. We'll keep in mind a few of the sectors. It's going to be very interesting, I think, rest of the month going forward, wherein we can get some good trading opportunities, one-way moves on the downside or sharp pullbacks, maybe to an all-time high. Okay, so that's the sectoral and index analysis from my side. As always, now we will move ahead. I'll take a look at your questions first, clear out your doubts, and then some trading opportunities for next week.